1.5 is a good multiple. 2.5 is outrageously high for buying someone's book of business in most cases.
But didn't really feel right about that business. It was captive. We didn't own our book of business. And there was just a lot of infrastructure that wasn't aligned with what I really wanted to get out of the future.
So Jay, this is my first time meeting you, and
Yeah.
tell me about yourself. You're in the insurance industry.
So I'm 31 years old. I've been in the insurance industry for around 6 years. I actually started in private. Well, my first insurance gig was actually PNC, but that was way back when I was 19, 20 years old. But I got my first footing in the industry for a private health insurance company, selling private health insurance, fully underwritten. I did that. I was top producer the first year. Then I got promoted. I built, mentored a team of 30. We did around $15 million in business that year. And then again, I was promoted 2 other teams, and I had a team of around 60 agents. We were projected to do around $45 million in business that year, but didn't really feel right about that business. It was captive. We didn't own our book of business. And there was just a lot of infrastructure that wasn't aligned with what I really wanted to get out of the future. So I ended up actually leaving that position shortly after my promotion. And I got into, so they got bought out by United Healthcare a few years back.
I see. So it became captive as it went.
It was captive prior.
Okay. All right.
It was captive.
What I call Obamacare or ACA health insurance. That was the gig?
No, actually private health insurance.
Private. Okay.
Yeah, what actually was, it was an indemnity plan.
Okay.
Yeah, it was an indemnity plan that had a short-term medical rider attached to it, where the insuree, if something major happened, could upgrade into a 6-month short-term major medical plan with a $3,000 out-of-pocket max, and then everything covered for those 6 months.
Yeah, and that became a lot more popular with Obamacare, those kinds of plans. Great. That's awesome.
Yeah.
Experience. When you say the amount of business you did in dollars, is that in premium dollars or in revenue?
Yeah, no, revenue. I wish it was revenue.
Yeah. Awesome. Cool. All right. Sorry to interrupt you.
No, please, by all means. After that, pretty much I decided there was just a lot of infrastructural quarrels that necessarily aligned with what I wanted to achieve. So I ended up leaving the company. I actually backpacked Southeast Asia for 3 months, kind of take a break off of everything, came back, and I decided I didn't want to lose a lot of the knowledge that I had in the insurance space. So I just decided to stay with insurance. But I also had quite a bit of knowledge around direct response marketing. My first business was actually a social media marketing agency before I got into the insurance space, which I did leverage while I was at that captive health insurance company, which attributed to my success there. Because over there, everyone was buying leads from lead vendors, and I was sort of only the only teams that was generating leads exclusively for my organization. So I decided to kind of just bridge the two together. I had experience in social media marketing, and I started to learn a little bit about life insurance. And I saw that the commissions were a lot higher. I enjoyed the product. I started learning about all the different types of life insurance. So I decided to kind of see what IMOs were out there, and I ended up interviewing a few of them, and finally I chose a home, and I decided to build the brokerage that I run today.
Awesome. What year was that?
We've been in business for two now, to be exact. So that was 2023, because I left the other company at the end of at the beginning of 2023, and then I took 3 months off. And when I got back, I spent a few months kind of figure out where I was going to nest at, and then in August is when I actually started to contract and get the ball rolling.
Okay. And I bet that social media background has been helpful. I think it would have been helpful for me.
Yeah.
It's still a world for me. Spent the last about 1.5 to 2 years building, I guess, infrastructure for it, not using it quite as much as I could have. But we're 2026 to really go all in on that. That's both the direct advertising and the just development brand presence. We've done a lot without even for almost 20 years with barely even touching social media.
Wow.
We didn't even ask for Google reviews till about a year and a half ago, which was just dumb as a doornail. Right. The Google reviews are stellar. They're awesome. Okay. We deal mostly with the retiree market, and that market loves our agents and writes about them like they're manna from heaven. So we should have started that a long time ago.
So what do you guys do specifically?
What do we do? Called comprehensive retirement planning. Okay. So we have almost every carrier in the United States that will deal with a brokerage, right? There's captive companies that are going to stay captive. They want their own agent force and they won't go outside, right? But if they're not that, we probably have them in our kit. So that's individual for individual families in the life and health space. So we have 4 on the insurance side. So there is the insurance business, and then close partner tied to that is our financial advisors. And in the insurance business, the 4 main lines are a lot of Medicare. We do a lot of Medicare, and that's our first place for most of our marketing and advertising. I can go into kind of why that's our first step. Lots of reasons for that. Life insurance of all shapes and sizes, everything from final expense to 1035 exchanges, even premium financing and max funded, you name it. Okay, simple terms. Then we do long-term, the whole spectrum. So whether it's hybrid policies, traditional long-term care, indemnity, membership plans, whatever it is, to fit the optimal, to optimize what that person can do to address long-term care futures. And then we're doing fixed indexed annuities. So pretty a focus on safety, right? Protecting people's retirements. And we've been doing that for a long time. And then we have our financial advisors that do assets under management, fee-based. They're all fiduciaries, and they assist our insurance agents on the larger or securities-based financial transactions. And then we have access through Schwab to an enormous of options. I don't think I can really put a number on it for our clients' money. So there we go. Now our market is the near retiree to retiree, but because of the breadth of products and experience we have, we're really serving all markets when it comes to age-based. And then, yeah, those are primary. Well, we got other things. We got dental in there and indemnity policies and cancer plans. We can help people with trust systems for their legal planning. So all that kind of fit around there. And we teach agents that stuff from day one. It's drinking through a fire hose when people come on with us, but we help manage it. Okay?
Yeah. So it sounds like you guys have sort of like from A to Z in terms of financial planning.
Yeah, we do. On the insurance side, the system, I didn't create it, a company called American Senior Benefits. This is their 20th year, their official 20th year. And I think our official is about 18 years. I've been doing this since 2008, and my father took into this very new model that we are today, that American Senior Benefits created in I think August of 2005. And when I told him I wanted to become an insurance agent, I was actually deployed in Baghdad. It was in mid 2007. That I was going to become a high school teacher after I got out of the Army. And he heard about that through my wife, and I had no idea what he did for a living. And so he wrote me a letter and said, "That's great, but here's what it's like." And honestly, I knew really 2 things. I didn't understand the rest. I knew, 1, I was developing an interest in finance. That's actually what I wanted to go into teaching for. I was working on my MBA. I wouldn't suggest trying to work on that in it didn't really work. I knew it was finance, and I knew that because it paid commission, it was a business, and I would get out of it whatever I put into it.
Okay.
Those two things spoke to me. That means I was in control of my destiny. I was about 28, 29 at the time. So at that age, young man, hey, you could take over the world at that age, right?
Right. Yeah.
I moved here to Utah and found out it was a brand new model. It was a hole in the wall compared to what we are today.
Yeah.
But I did get lucky. It's a good system. I'm biased, obviously. I've grown up in this system, and now I run this agency. But I've enjoyed it.
Nice. Sweet. So like you guys have a plethora of services, but you really haven't tapped into, the side of things. I guess, what are you really like hoping to get out of journey in creating content?
I know these are the things I think I know, but who knows, right?
Yeah.
My now again, the thing we do feeds into our biases, and the social media I consume is primarily YouTube and Reddit.
Okay.
For better or worse on both of those. Facebook, I'm barely on. Although our agency's on there, it just doesn't attract me. But Facebook, Instagram. So YouTube, what I hear is that YouTube is a good spot to make your primary, but it has a longer tail. It's more work, and it's not immediate feedback.
Right.
As far as monetizing and all that kind of stuff. But it's the format I like, not only because I consume it, but because I tend to be long form. For my brevity, and I am for being a teacher, and I genuinely enjoy that. It's my favorite part of all the work I do. So YouTube seems to work that, and then we can take pieces of what from YouTube that can be shortened, and it can be YouTube Shorts, it can be TikTok, it can be Instagram, Facebook, all of that. So it's a good basis, and then everything else can be pulled from that and derived. Right. So that's my thought process for video, right? Video's where it's at. Even as we what sales letters they're called, they're the hot thing. I know that Alex is always suggesting, his team is. And so all of that will feed into each other by starting with YouTube. So
is that client acquisition or both, and agent acquisition? So
right now I've started with the agent acquisition side, just telling our story and how we do business, who the kind of people that are good fits, and even they're not. So that's also been the most comfortable channel to start. I worry. I am this whole year, my sort of media team that we have now. It's through our financial advisory. One of my financial advisors has built a service as part of his financial advice services, and it's our agency as well, because those people are getting a lot of experience. They're still going to charge me, but sorry, I lost the train of thought there. But I have perfect be the enemy of good this year when it comes to the consumer side. So I've been okay on the agent facing side, which we have a channel for that. Okay. But our consumer channel, I haven't really started because waiting for everything to just be perfect. And I intend to fix that. Content out there.
So do you guys run a brokerage model, or is it sort of like an LOA where you have like salaries and then commissions, or is it 100% commission?
No, it's all 100% commission.
Okay.
It's 100% commission. Everybody here is they're in business owner. And I'm not against salaried careers and jobs. That's just not our model. I had the benefit of working with my father in the first little over half of my career in this, and he was one of the very best. I mean, he was a $1 million roundtable sales agent in the early 1980s in his
Wow.
first 3 years in the business. Every year he was MDRT. For those who are don't know what that is, that's the life and top salespeople in the United States, top 1%. And then he started building agencies for Prudential. He took over a poor performing agency and turned it into their number one agency in the region of the US, some out of 50, 60 different agencies. Later, he did likewise for MetLife, company called Businessmen's Assurance. He took a dozy office in Atlanta and turned it into the number one office in the United States for that company.
Wow.
This is about the late 90s. And then I went off to college, did all that stuff. And then later, you heard that other part of the story. I joined him and really understand or appreciate that background until I was working with him. So I was very lucky in that not only do I like this model, and I think I'm lucky I started with it. I had a good mentor, especially on the care and feeding of our insurance agents, right? This business is complicated. When I went to, I've heard this several times from people who are unusually experienced in the business space. People who have been CEOs, operators, and builders of multiple different businesses. I was talking to a gentleman who'd been part of the acquisition space, nothing to do with Alex Hormozy, just a few years ago, and had worked in my business for a little while. And he said, Larry, every business I've ever been in, I can find one thing. And if I drive that one thing, it makes all the difference in the world. It is the lever, right? Said in this one, I can't narrow it down to any less than 5 things. Thought that was okay. And then I went to acquisition to comms training just a few weeks ago. There were 2 days of training. And one of the best parts of it was that there were so many business owners from so many fields. Surprisingly, I saw only one other finance-based person there out of about, 60, 70 people that were there. So a really diverse crew. That's what I was gleaning. Part of what I was gleaning from there too was that the insurance space just is a little bit extra complicated, but we have some cool features. So I'm kind of going all over here. We have some cool features. Renewals. So in business, if you have contracts, literally what we have is contracts, policies that are paying. And if something goes wrong in your business and it's not working, but at least those policies are still paying consistently, you can live through most things, right? Other businesses, if they lose cash flow, they're dead in the water, right? If they lose cash flow for too long and can't figure out something to restart that cash flow. And at the beginning of our business, now in my side, 100% commission, the first year is certainly the hardest. The second year isn't a huge difference, but you get past the first 2 years into your third year, and especially beyond 3 years, your renewals are paying your bills, right? For an agency, similarly, right? And that's huge. That's a huge that cash flow. I think it's half the reason being in this business. It wouldn't be the same at all without renewals.
Yeah. And the on the Medicare thing, my understanding is the renewals are the highest in comparison to life and health.
Yeah. Easy way of saying it. So a Medicare renewal is if you get paid $400 on a Medicare policy, whether it's a Medicare supplement, Medicare Advantage, you're probably going to get $400 the next year. They'll just divide it by 12 or pay you renewals. Okay, so they'll divide it by 12 and pay you monthly. Out of that, if it's a Medicare supplement, most of the Medicare Advantage plans pay you the whole amount in January if they're Medicare Advantage. And then some Medicare Advantage will pay you a larger amount, basically twice as much if it's the first time the beneficiary has ever been on that kind of plan.
Okay.
So instead of 350, you'd get 700, something like that, depending on the plan and that year. And Medicare Advantage commissions have been going up a smidgen each year. for most years. They've been inflating on it less than what pay less than the Medicare supplement, but that's really reversed now. But yeah, that's one of the big attractions of Medicare is the persistency of their renewal base. In ours, I think we get most out of it. Not only are we 100% commission, right? We're the whole retirement space, but we do our business in person. We don't do phone sales. It's not an area I understand very much. I've talked to phone sales people. That's fantastic. It has its own skill sets. But I'll tell you one thing that's great about doing business in person is you're going to sell more. You're going to sell, I guess, more than one thing. You're going to sell more. You're going to sell bigger tickets, and you're going to have stronger persistency, and you're going to have far more renewals. Not renewals, but referrals and renewals. Okay. Downside is can be until you get to all the referrals, and half my agents are nearly 100% referral based or are 100% referral based. I got a lot, we've been around a long time. We got a lot of veteran agents. After 5 years or so, you should have a pretty strong deck of renewal and be building from. You don't want to be relying on leads your whole career, right? You don't want to be starting brand new with everybody. After 5, 6, 7 years, just about every new person you talk to should basically be a warm introduction. But yeah, so our persistency is very high. We have very low chargeback rates. Final expense, I know it's a point for people who sell it as chargebacks, is certainly our highest chargeback area. But if an agent is getting more than 10% in chargebacks, they're probably doing something and identifiably wrong that we can fix. So even 1 in 10 is too much for what we're used to space.
Wow.
So we talk to them in person. We know them. They know where you live, so.
That does make sense. Yeah, we're fully, definitely the persistency is substantially, but it makes sense. You meet people in person, and when you have a warm introduction through a referral base, and there's trust already established, and yeah.
Yeah, there's trust. Start. I mean, when you introduce yourself at the door, so I'm kind of gonna go with a new agent experience because I know that's the most the poignant part of the business. If you're 10 years in, you show up at the door, they know exactly who you are, why you're there, because it was probably a referral. And heck, they might be coming to your office. In the office I'm in, we have what time of year? We have clients all day long to see agents here in the office. But when you're new agents who are still learning on the phone how to talk to, they're still setting the appointment from lead if they're brand new, right? So half the time they show up and the person forgets they booked the appointment, right? There are some clear no-shows, but usually they forgot the appointment and they're still home. And so, no, there's no relationship there. As soon as you go in, you sit down at the kitchen table or on a couch and you start talking, a human relationship develops because, yes, the voice is key. And I know guys like you are great at training voice and speech. And I know we could learn a lot from that because we don't rely on it so much because we're in person. We can rely on being very human in person. And it's more about it's you're sitting. It's about your body language. We actually train on that a lot at the start when we train agents. Yeah, the trust starts really quick because you're a real person.
Yeah, that makes total sense.
So you're focusing on final expense. Is that right?
No, I started in final expense.
Okay.
Yeah, that's right. My footing inside the life insurance space, but then we moved over to IUL specifically, value life insurance, and we've kind of been funded supplemental space since.
Okay, that's fantastic. And do you focus whole life or ULs? Do you do whichever or a preference for one or the other?
Most of our business is ULs, so indexed. Pretty basic. Your 500 index max funded IUL. We have a max funded whole life policy if the client doesn't necessarily want to deal with the volatility and they would prefer a guaranteed rate of return. Seldomly does that happen. Most of the time, just because our lead acquisition and our entire marketing funnel is centered around IULs. So because it's centered around IULs specifically, most of our clients come in and they're not necessarily requesting a guaranteed rate. They understand that it's going to be variable, and they're fine with the floor and having the opportunity to earn more interest.
Yeah, wonderful. So how many carriers do you usually select from?
We're contracted with maybe about a dozen.
That's about all you need in the IUL space. It's not like there's that many that are good at it.
No, yeah, we have big
In the
guys,
max funding
Mutual
space,
of Omaha. Right, yeah. So but we out of those probably use 4, maybe, give or take. National Life Group, Mutual of Omaha.
Yeah, there's not a ton that are really in that space with good designs. Yeah, I enjoy that space, but for everybody, right?
No.
Not every consumer, kind of like not everyone can afford an annuity, not everyone can afford an IUL or has the temperament or finances for it.
Right.
Do you so are your marketing is primarily media, or do you use third-party lead vendors much?
No, so the previous health I worked for, it was strictly third-party lead vendors. I wasn't too excited about that model, particularly the consistency that I continued to observe was they run a business fueled by how many leads can I sell, not necessarily the quality of the lead. And nothing against them, that's their business model. It's just from an agent perspective, it took me a long time to realize how important persistency was in this business, and retention rate and renewals. So when I got into the life space, I was already traumatized, so to speak, lead vendors, and I had the experience generating my own leads. So I just ran with that. So I primarily run ads on Meta, drive traffic to a landing page, VSL, copy, qualifying questions, to a booking page. That's pretty much our funnel at the moment.
Okay, wonderful. Primarily Meta, right? That's the main space. Okay.
Yep.
Yeah. I got who really like me to do a lot more on that platform. I probably should. So
Yeah, I mean, it's unfortunate to say, but our entire business is centered around our full lead at the moment is driven by Meta.
So even right now, I use a vendor who I think primarily uses Facebook, called Kaboom Leads, and I think they're a cut above. I've used them for a little over a year now. I source a lot right now. I use a lot of third-party vendors. We have about 15 years. They're called Market Access. They do a fantastic job. I've used other mailers too that do okay, but really no one has done a better job than Market Access for us for a long time. Although mailers, the response rates continue to go back down a smidgen every single year. So there was a day we were getting 7% response rates.
Wow.
Off mailers. That was years ago. And today it's about somewhere between 0.5% to 1%, depending on the county and the month and everything. So that changes a lot. But those leads are still our very best leads. Our very best leads, because a person had to put something in the mail, fill it out, right, and take a physical action and consciously do it.
Right.
But one thing I like about this lead vendor is that for the same price I would pay every other lead vendor, they send a follow-up letter to the consumer. So the consumer puts in the first letter. They say, hey, would you like more information about Medicare and Medicare supplements? Great. Cut it out, put in their information, send it in. A secondary piece of that, if the agent can't get in touch with them, because they send it in doesn't mean they're going to pick up the phone, right? A lot of people aren't.
Right.
So some are, some aren't. I give my agents, a decent agent. It should be booking appointments 1 out of 2, maybe 1 out of 3 of those that they get in touch with over the phone. If they can't, they can do a drop by, and they're great drop bys because you just bring the printout with you, and they have their handwriting, their signature there. And so they say, "Oh, is this you?" And their whole tune changes. They go, "Oh, okay." And those tend to be really good appointments. And they do an overlay over the demographics, the how much money those people are worth, right? So they tend not to be targeting low income projects or anything like that, which most other, especially final expense mailers, definitely do. If you're
Yeah.
doing final expense, you're going to err low income a lot. So they send that follow-up letter after they receive their initial response, and that follow-up letter says, "Thank you. We got your request. Someone's going to be in touch with you real soon." That second letter is magic, I think, because it reminds them
Yeah.
what they did. So we like that, and then we use Kaboom, I mentioned, and a few other vendors for here and there that we test out.